because that leads us to the key to this trade of how much we want to make on a weekly basis. We want to make 1 to 2% each week consistently, at least 1 to 2%. Nothing is going to be 100% of the time, but almost 100% of the time, you should be making 1 to 2% weekly like clockwork. And when you have to adjust the trade, you should be making 2, 3, 4% in a week on your trade. And you're basing that on a dollar amount. So if you do not have $5,000, then this trade is not for you. This trade is not for you. You can finish listening and learning, but you're not ready for this trade if you don't have enough capital yet. This is not some get rich scheme. This is not some use $100 to make 5,000. That's baloney. In this video, we're going to go over what we call here at the Dorian Trader the print money 7 DTE strategy. It is a weekly trading strategy that is darn near like printing money. Yes, we're using somewhat of a wordplay, but we literally feel it's almost like printing money. If you understand the process that we teach, you're going to feel most of the time like you're darn near printing money. I have been doing this trade for 64 weeks in a row. And I went 54 weeks straight without losing. Let me repeat that. I went over a year, 54 weeks straight without losing, putting on a 7 DTE trade at least once a week for over a year. Sometimes I put it on twice in a week, but putting on this trade every single week religiously and making money week after week after week. Now, I'm sure you have heard of a number of different weekly option strategies from others out there on YouTube, perhaps. But this is not like that. We completely differentiate ourselves from all the others with this strategy that we call the print money 7 DTE strategy. If you learn the rules and the procedures behind this trade, you're going to feel like you're darn near printing money. You're going to put on a trade that expires 7 days from the day you put it on, and you're going to have tools to be able to fix the trade if it goes wrong, because a trade will go wrong from time to time. You can't expect to put on a trade and everything always goes correctly or without any issues. That is just wishful thinking. But if you follow the strategies that we teach, the process that we teach, you will still win 95% of the time. As I said earlier, I won 54 weeks in a row on this trade, this exact trade we're going to discuss on this video. And I am not a genius. To my wife's chagrin, I am not a genius. But this trade makes you feel like you are a genius, makes you feel like you are complete control of your destiny week after week after week. So if you want to supplement your income, if you want to have it your primary source of income, you learn this process. You just don't learn it to know the steps. You learn it to be able to teach it. You have to know the ins and outs, all the nuances about the trade. And if you do it, it's going to be like printing money week after week after week. And it's going to be some monies you can count on to be able to supplement your income in a meaningful way or make it your primary source of income. At the Dorian Trader, we put on this trade every single week, and you can follow. You can follow the trade and make money, but we don't want our members to be robots. We want our members to understand how to do the trade on their own, and when things go wrong, they can fix it themselves, even though we're there for help. One of the unique differentiators here at the Dorian Trader is that we give 911 help to all of our members. But just like in the real world, when you call 911, are they going to get there instantaneously? Most likely not. And so, yeah, we try to respond to 911 issues as fast as we can. But sometimes things need to be fixed instantly. And so the only way you can do that is understanding how to do it yourself. And we'll teach you that here at the Dorian Trader. Now we have a course. Like I said, it's called the Print Money 7 DTE course. You get that course and you learn the course as if you had to teach it. And then you're going to have the tools. You're going to have everything you need to be successful so that you can darn near print money every single week. And when things go bad, when things are a little fuzzy, you have us, you have me there to guide you in the right direction. I said I won on this trade 54 weeks in a row. And that time I lost, it was a very, very small loss, $120 loss. So we teach you how not only to win 95+% of the time, but when you lose small. And it's just following the steps that we point out in the course. Just following the steps that we point out in the course. So let's talk about 4 key things that you will learn about this strategy. Number 1, you're going to learn how to put on the trade. Because putting on the trade is when you can control everything. You can control absolutely everything about the trade when you put it on. And we teach you what criteria you should be looking for before you execute that trade, before you hit that send button to get filled. What criteria is going to set you up correctly to have the odds on your side significantly from the start. Then step number 2, we teach you how to read your trade and your portfolio, how to understand what's going on with that trade. Is the trade going well? Is the trade going poorly? Do you need to do a defensive adjustment? Do you need to do a proactive adjustment? Should you take profits? All the ins and outs about reading what's going on with the trade and your portfolio. Step 3, which is the hardest step to get, and that's adjusting, teaching you all the different things about adjusting the trade. Understanding what is a roll up, understanding what is a roll away, understanding what is a roll out, understanding how to add additional contracts to be able to get yourself further away from where the stock or the underlying is currently trading at. How do you adjust to give yourself the best chance possible every adjustment that you do, after every adjustment that you execute? And then step 4 is, how do you take off the trade? How do you take off the trade? It's a lot of nuances to taking off the trade. So for example, sometimes you can't take off a trade as an iron condor. You have to take it off as a call spread and a put spread, or you have to buy back short legs. Or sometimes you can't take the trade off based on percentages that a platform gives you because you have adjusted the trade several times and that percentage that the platform is showing you is not correct. How do you determine when to buy back a trade to get out of it? We teach you those important details. So let's break down step 1 a little bit so you can kind of get a glimpse of what you'll be learning at the Dorian Trader. So as you can see on your screen here, we have a 7 DTE Trade and we're using the SPX. If you work a full-time job, we'll teach you how to do this using the /ES, the options on futures, the S&P 500 options on futures, so you can do it at night and be successful at it as well. But if you can trade during the day, then the SPX is the better option. So you're going to choose 7 days to expiration. It's a 7 DTE trade. You're going to start off by checking the straddle price. The straddle price is like the back of the envelope type of calculation of the expected move. All platforms that specialize in options trading will give you the expected move to the right of the option chain. Here on the TastyTrade platform, as we're demonstrating, this is considered the expected move. That's the 1 standard deviation move. The 68% of the time is expected to fall within this expected move at expiration. Some of the platforms calculate that expected move differently. But if you want to be uniformed, and we want to be uniformed, initially at least, we go by the straddle price. So the straddle price will be the same for everyone. And so that straddle price in this example is 67.10. And sometimes we'll just round that up, even though rounding this to the nearest whole number be 67. We're going to round it up to 68. Right? And so what we do is we take the 68 times 2, because we want to be 2 times the expected move. So the 68 times 2 equals 136. So this is where we're going to start our trade at. We're going to take that 136 and we're going to add it and subtract it from the last price, plus or minus. And that's going to allow us to set the trade up correctly, the way we want. That's the initial steps of setting up the trade. So if we do that, if we take the 55.55 plus 136, on the call side, it's going to be 56.91. So basically around 56.90. So that's the call side. And we're going to do a 10-point wide spread. So we're getting $45 on the call side. Then if we go to the put side and we take that 55.55 minus 136, that's going to take us to 54.19. So we're going to say 54.20. So 54.20 is right here. We're going to do a 10-point wide spread. So this is giving us $90. $90 before fees and commissions. When we execute this trade, we want to receive at least $100 after fees and commissions, because that leads us to the key to this trade of how much we want to make on a weekly basis. We want to make 1 to 2% each week consistently, at least 1 to 2%. Nothing is going to be 100% of the time, but almost 100% of the time, you should be making 1 to 2% weekly like clockwork. And when you have to adjust the trade, you should be making 2, 3, 4% in a week on your trade. And you're basing that on a dollar amount. So we want to receive at least $100 because that $100 reflects how much we want to make after we buy it back, after we close the trade. So at the Dorian Trader, we teach members to start off with $5,000, $5K for every one contract they're going to initiate with. So if you do not have $5,000, then this trade is not for you. This trade is not for you. You can finish listening and learning, but you're not ready for this trade if you don't have enough capital yet. This is not some get rich scheme. This is not some use $100 to make 5,000. That's baloney. You need to start with capital. This is a linear game, meaning that the more capital you have, the more money you can make and the less percentage you need to make a certain dollar amount, a big dollar amount. So at the Dorian Trader, we say if you're gonna start with one contract, then you need to have 5K. Okay, and you're trying to make at least 1 to 2% off that. So 1% of 5K equals $50. If you're going to start with two contracts, then you want to start with 10K. And then 1% of that would be $100 that you're going to make in a week. If you're going to start with 3 contracts, then you're going to start with 15K. And then 1% of that would equal 150. And so if we broke down 2% would be 100 off 5K, 200 off 10K, 300 off 15K, and then so forth, right? You keep scaling based on how much capital you have and allocating 5K to every one contract you start with. Because one of the keys to this trade is how you adjust. We call it ammunition. You're never going to use more than 5K of your account if you initiate with one contract. But you can add another contract. So 2 contracts is 10K, 3 contracts is 3K, 4 contracts is 4K, and then 5 contracts is 5K if you are starting with 1K, one contract. So this is important to understand, and we break this down in the course. We break this down as a member of the Dorian Trader. But this allows you to win when things go wrong. The market will have to do something extraordinary to beat you. But sometimes Mr. Market does do something extraordinary. And so you're going to have an uncle point. But we're going to teach you all the different adjusting techniques that allow you to win and win and win some more. Okay. You start off by putting a trade 2 times the expected move. You can see we're only getting $90. We want to receive at least $100. So then you start adjusting the trade, getting closer to the 10 delta. You do not want to be higher than the 10 delta on either side. So if you think about probabilistically, if you take the 10 delta and you add it up on both sides, that's 20. You minus that from 100, that's going to be 80. You're going to have an 80% chance of winning on all the trades that you initiate, at least an 80% chance of winning. Right? So that's why we don't want to go higher than the 10 delta. So you can see on the put side, we are at a 7 delta, the 2 standard deviation move, that expected move there. On the call side, we had a 5 delta. So let's just move up this call side. You can decide what you want to do. I'm going to move this call side to a 7. And that's going to put us at 115. So that would be enough after fees and commissions. So if you hit the fees and commissions here, you can see that it's still receiving at least $100. This is 107, almost 108. And we're only using one contract. So this is the initial buying power, but we're acting like we're using 1K. We got 4K set to the side. We can add up to 4 more contracts if we needed to be able to adjust. I'm not going to talk about that in this video, but that's a key component. That's one of the 4 major parts of this trade as we discussed earlier. So once you've set up the trade, now you can send this. And then we teach you how to put on alerts to make sure you get alerted on your phone and by email if something's going to go wrong, but you need to be monitoring this trade. It's not a 0 DT, a day trade, or a 1 DT trade that you need to monitor closer, but you still need to monitor this trade and you should be looking at it on a daily basis. Do you have to sit by your computer? Not most of the time, but sometimes you will, to be honest, right? But you will be printing money, darn near printing money. So once you put your alerts, you'll put your good to cancel. And if you do not have to adjust, you're going to make 1%. If you do not have to adjust, you're going to make 1%. You will have to adjust this trade 40% of the time. So 60%, 60 plus percent of the time, you're not going to have to adjust this trade and you're going to make that 1%. But if you have to adjust, then that's where you're going to shoot for the 2%, the 3%, the 4% in a week. Okay. If you're going to have to adjust the way we teach you, you should be able to make more than that 1% then, closer to that 2%, 3%, and 4%. It's a process to this. It's steps. If you learn the steps, it's going to feel like you're printing money. If you really want to find a strategy that you can count on that's short term, you have to give this a shot. You have to give it a real shot. You have to sit down and want to study it, the ins and outs of it. Because I'm telling you, we have members that's duplicating the success I've had. Yeah, they haven't won a year yet, but we have members that's been going 6 months without losing. You can do it if you understand the process and you're going to feel like you're printing money. Let's make this money together. Let us know how we can help you. Thank you for watching this video. Like it, leave a comment, and subscribe. See you in the next one.